Welcome to the deep dive. So, Wednesday, August 13th, 2025, global markets saw this powerful risk-on wave. US, Japan, new all-time highs. Quite a day.
A remarkable day, definitely. But what's crucial, I think, is that while the global picture was, well, overwhelmingly bullish, India was more complex, much more nuanced.
Right. And then you had the digital asset space doing its own thing. Almost two different stories there.
Exactly. A really fascinating dual narrative.
Okay, so our mission today, let's unpack what really ignited that global rally. We need to look closely at India's situation and explore that digital asset story, too.
We'll dig into the market reports, the macro data you've shared, and pull out the key insights.
Perfect. So let's start with the global surge. What were the main catalysts? What really kicked things off?
Well, the primary driver, no question, was the U.S. inflation data, the CPI report for July.
The CPI. What did it show?
It came in softer than people expected, only a 0.2% increase month over month. That pulled the annual rate down to 2.7%.
And that really moved the needle on Fed expectations, didn't it?
Oh, absolutely. It basically cemented the idea of a near-term rate cut. The probability of a 25 basis point cut in September just shot up.
How high?
Nearly 94%. So the market was pretty much pricing it in as a certainty at that point.
Wow. Okay, so that's a huge factor. Was there anything else major contributing?
Yes, definitely. There was also a pretty significant geopolitical development.
Trade-related.
Exactly. The U.S. administration extended the tariff truce with China. Another 90 days.
Pushing the deadline out again. That must have calmed some nerves.
For sure. The new deadline became November 10th. It provided some much-needed stability, for global trade dynamics.
So you have dovish Fed expectations brewing and easing trade tensions. That sounds like, well, rocket fuel for stocks.
It created a near-perfect environment, really. You saw it in the indices, S&P 500, NASDAQ, even the Nikkei 225 in Japan, all closing at fresh record highs.
And the VIX, the fear gauge,
stayed low. Subdued around 14.5, investors felt confident, and the 10-year Treasury yield dipped a bit, too, to 4.29%.
Making equities look even more attractive by comparison, right?
Precisely. The market seemed primed, just waiting for that inflation signal.
Okay, so that's the global picture. But like you said, India was different, more complex. They participated in the rally, yeah. Sensex up about 0.4%, Nifty nearly 0.6%.
They did join the rebound, yes. But it happened against a, let's say, challenging domestic background.
How so? What were the contrasts?
Well, on one hand, you had fantastic news on inflation. Consumer inflation fell to an 8-year low, just 1.55% in July.
An 8-year low, wow. What drove that?
Most of food prices. The Consumer Food Price Index actually fell by 1.76%. Negative inflation there. That gives the Reserve Bank of India a lot of flexibility policy-wise.
Okay, low inflation sounds good, but what was the flip side?
Industrial output, that was concerning. The IIP data for June showed growth slowing way down, just 1.5% year over year. That's a 10-month low.
We're dragged it down.
Mining saw a big contraction, down almost 9%, and electricity output fell too by about 2.6%. So a real slowdown in core sectors.
So you've got this split picture domestically. Low inflation, but slowing industry. And underneath that, wasn't there also this institutional tug-of-war happening?
Yes, absolutely. Foreign institutional investors, the FIIs, kept selling. Like on August 12th, they net sold almost 3,400 crore. That's what, around $400 million?
Quite a bit of selling pressure, but the market still went up.
Because the domestic institutional investors, the DIIs, were buying just as much, if not more. They bought over 3,500 crore that same day. They lagged. Financial services, private banks, realty. They were the underperformers. Dearson Bank actually fell about 1%.
Interesting. So that suggests the rally in India was maybe more imported, tied to the global mood rather than pure domestic confidence.
I think that's a fair assessment, yeah.
Yeah.
It points towards the external drivers being key that day.
Okay, let's shift gears to digital assets because you mentioned that dual narrative. What was going on there?
Right. So on one side, you had a really significant moment for accountability in this space.
You mean the Duquan news?
Yes. The founder of Terraform Labs, the ecosystem behind the TerraUSD and Nuance collapse.
The $40 billion collapse. Hard to forget.
Well, he pleaded guilty to fraud charges in a U.S. federal court. Agreed to forfeit over $19 million, too.
That's a big deal for the crypto space, isn't it? Signaling more accountability.
A very big deal. It's a clear signal, a necessary step, perhaps, for the industry's long-term maturation and building trust.
Okay, so that's one narrative. Regulation, reckoning. But you said dual narrative. What was the other side?
At the exact same time, the broader crypto market was actually rallying strongly.
Really? Despite that news?
Yep. And it was led by Ethereum. ETH surged over 8%, getting close to that $4,700 level.
What was driving the Ethereum rally specifically?
There's this compelling new narrative building around corporate treasury adoption. It's gaining steam.
Companies putting Ether on their balance sheets.
Exactly. Companies like Bitmine Immersion, 180 Life Sciences,
Yeah.
they revealed they hold significant amounts of Ether. And then Sharplink Gaming actually raised $400 million specifically to buy more Ether.
Wow. So it's not just speculation, it's corporations seeing it as a treasury asset.
It seems like it. It suggests maybe a new phase of maturation where investors are really starting to differentiate, Bitcoin as digital gold perhaps, but Ethereum as something else. Maybe a productive foundational asset for this new digital economy.
Fascinating. So putting it all together for Wednesday, August 13th.
It was just a day packed with these profound market movements. You had the big global shifts, the macro data, the geopolitical ease.
But then nuanced by India's specific domestic crosscurrents.
And that really interesting split story playing out in digital assets. Accountability on one side, a new rally narrative on the other.
It really underscores how interconnected everything is, but also how unique regional and asset-specific stories can be. Understanding these complex forces is just crucial for navigating finance today, isn't it?
Absolutely. It's rarely just one simple cause and effect.
So here's something to think about. As these global currents, these digital trends keep evolving and reshaping things, what surprising new connections might emerge?
And how will those connections challenge your, traditional views of value and risk?